Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Thursday, January 2nd, 2014. And today is actually January 1st, so I want to wish everyone a Happy New Year. And this video is brought to you by Triton Wave Consulting, which is the home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. And this is a statement of disclaimer that I am required to show. All right, let's start by looking at the S&P. It's the first video I've done. I haven't done a video for about 3 or 4 weeks. But I wanted to show you this S&P chart on the left over here. And this is a weekly chart of the S&P. Now, from the lows of March of 2009 back to the high of October 2007. And if we take, and you can see that this has just gone basically straight up. I think it was 6,600 on the S&P, and now it's 1,800. So huge move. But I wanted to show you in terms of extension what this actually is here. Now if we take the high of this period in 2007 to the low of 2009, we are at the 1272 extension right up here. Now this 1272 extension is actually right around 1836. And with the 11-point move on the S&P on Tuesday, we've actually gone a little bit past that. We ended up at 1846. The 1272 extension is 1836, so we're about 10 points behind it. But just to let you know, it's pretty rare that this would continue and go up to the next extension up to 2153, which would be the next extension, without some kind of retracement. And the retracement that I'm looking at as a possibility for this is even if it just comes back to the 21 EMA right here, it would be 1753, which is 90 points below. So it could come back down to there over the next 2 weeks. It doesn't mean that the market is over. It just means that it's taking a break. So over on the right-hand side here, we see the daily move. Now the daily, beginning in December of 2012, right up here at 1716, came all the way through. It bounced off the minor wave here. This is the minor and this is the major. The dark blue is the minor wave. The lighter purple one is the major wave. So it bounced off the minor, came back down through it, came up to it, kissed it, and then came down, moved up, and came down to the major wave. And it took until July of 2013 before there was any significant bounce. And you can see the crossing of T1. For those of you who are just joining me, these are Triton waves. This first wave is T1, this is T2, this is T3, this is T4, and this is T5, all standing for Triton waves. You can see the move up here on July 31st, 2012, and then it moved from approximately 1597 all the way up to 1800. December 2012, it moved from 1725 all the way down to this major line down here, the Triton major, and then it kicked up right here on the daily chart and ran up about from 1292 to 1434, and now it's creeping back down again. And also, the 8 and the 20. This is the I'm sorry. The yellow is the 21. The red is the 55, and they both the yellow crossed under the red, and they're both below the major wave. This is definitely the beginning of a cell signal, and that's why I think the 1272 extension here on the left might be an intermediate top. Okay, if we're looking at smaller time frames, this whole chart on the left goes back to the end of November. So this is basically all of you're looking at all of December on this left-hand chart. It's a 55 minute chart using Globex pricing, so it's 24 hours. The right-hand chart is 987, and this is only it's like about 40% of the left-hand chart that only goes to December 18th. And you can see quite clearly the major moves in the S&P with the waves going above zero right here at this point from 1790 up to a peak of 1810, and this starts rolling over from 1805 down to the major line right here, and then you wait until it crosses above it, and you can ride this thing all the way up to 1837. On a smaller time frame, going back to December 19th, which is right in here on T2, then that you get a nice move from 1191, and then it kind of it hits the minor wave, goes a little bit above it, comes back down through, and when it comes down through, T1 has already come below zero, and T2 comes below zero. Now, the reason why you don't want to get it in here is because T2 is still above zero, so it's still an upward move. So when T1 comes below zero and this is descending, you can even wait until T2 kicks into place, and you can get this move from 1208 down to 1181, and then just wait, which is a match to the bottom, and then you can take this on up through here, which is not such a great move, but it turned out to be not so. Oops, I'm sorry. I'm looking. I'm showing you gold, and I don't mean to show you gold. Hang on one second. That right-hand chart should be the ES. Okay, so here's the ES. Sorry about that. So this ES chart actually only goes back to December 24th, so it's a 7-day chart. But you can see on the shorter time frame one, like the 987, you have to go a little bit deeper into the chart pattern. So the T3 right in here. Let me get a pointer for you here. T3 is right here and right in here. It didn't really produce very much, but you did get a move from about 1835 down to the minor line of 1832 before it popped back up here, right in here, and it bounced off of that, and you got this entire move from let me see, that's about 1835 up to 1846. So they're smaller moves, but if you wanted to if you wanted to use the bigger time frame one, then you wouldn't have to look at it so often. All right, let's take a look at gold. Okay, my weekly gold chart actually goes back to about let me see, it goes back to 1975. So there's a lot of information in here. And you can see that T1 went below zero back in April of 2012. T2 went below zero in July of 2012. T3 went below zero. This one right here went below zero in March of 2013, and then T4 back in June of 2013. There's been a steady decline, and it actually just went below zero right here completely on T4 right in here about 3 or 4 weeks ago, and that's when it came down here and then it went through this. Now let me show you in detail what's happening here, because this is the minor wave here, the minor Triton wave, and just to let you see what's going on here. It slipped, it kind of like kissed the low from June of 2013 and then did a bounce up, and I'll show you on a daily chart exactly what's going on. But just to let you know that this is the line in the sand right here at 2019, and right now it's up about $21, which is kind of like a kick from what it's been doing all week and tax loss selling and all that stuff. So it's a minor blip. I don't expect it to hold for too long, because when we look over on the daily chart on the right hand side, this is what we get here. We get, and you can't see it here, but if you stretch this out, you can see that the T1 has gone below zero here on at least the smaller wave, and the smaller wave right here is negative 0.79 as of Monday and Tuesday. And this is below zero, this is below zero, and this is below zero. So since these are below zero, whenever the daily goes below zero to match the anchors of what's already going on T3, T4, T5, you can expect a big drop. So we're going to look at this a little bit more closely, because that did come back up to the minor wave, and then it let me see, it went from 1256 down to about 1200 in about 5 trading days. So it kicked up a little bit, came down again, it's kicking up again. Possibility it could come back up here, but I don't see that. I'm looking at it closely. I'm not sure exactly where it's going, but what I did want to point out was that the 55 period moving average is now, for the past 2 trading days, below this minor wave. And that's very, very significant. And also on the left-hand chart, they are right at the minor wave right there. So in other words, we could come down and just see this resistance here, and then it broke through resistance right here. We could actually see $1,000 in gold on a selling panic. But let's break this down a little bit. I'm going to make this a daily on the left-hand chart, so we can do it by comparison. In the right-hand chart, I'm going to do a 55 Globex movement, and we can see exactly what's going on here. Okay, so far on the daily, I just moved it over 1. This is kind of spurted up. It actually could come another 20 points and still be very, very negative. And you can see if I move the cursor across from right to left, that it ends up. This is all of December. So, I use this as a general guide. This is not the one I trade off of, but I'll show you the one I trade off of. So when this is rounding off and starting to come down, I look at smaller time frame charts. So this especially because it crossed on gold, it crossed right in here at the minor wave, and you could have in the capture was between 1246, and then it sunk down to here to 1222. So it's a quick 20-point move, and you get your 20 points and you get out. You wait for a kickback to come up to the resistance, which is now the minor wave, and you wait for one of these smaller waves to roll over. And this is another 1230 to 1185. So that's like a 45 point move. This moves above zero right here at 1199. You just play it up to resistance right here, and that is also a 20-point move. And all this happened in December. So let's break this down. Let's make this a 55 on the left. And I'm just going to show you side-by-side comparison charts here. And we're going to do let's see if the 987 works on here. Hang on one second. Okay, so I've moved the 55 over to the left just as a guide. And where you see this hash mark here. Whoops, wait a minute. This whole chart over here on the 987 tick chart just goes as far as when this came down here. So we'll get a closer look at what's going on right here. This is after the Fed announcement, so you kind of want to leave that alone, wait till it settles out. But when it does actually settle out, right in here, you can see the move below on the 55, right in here, when gold was selling for about 1230, and it immediately took a drop down to 1185. Nice move, very short term. Same thing here. This is on the 987. This is like a little bit. This is about 1230, and it comes down as soon as this crosses up here. Bing, you're out, and then because the daily was so weak, then at that point, since it first came down, I didn't play the first bounce. So I'm waiting for something like the T1, T2 to come along, and that is closer to the bottom, and you're only playing it back up to near the minor, or you can wait till it breaks through, but you might get scared and move out by the time it comes back. So it's a good idea. Just if it moves near the minor one, then you're out, because you've captured 20 points and you're out. And you can see right here on the 987, also as we move closer to current prices, this is right here at 1212, moves down to 1180 again. So you get your 20 points and you're out. Okay, so let's look at a 144 chart, and you can see even tighter trades right here. We can move back a little bit. Okay, T1 moves below zero right here. I'll tell you what, let me that's not the one I want, never mind. I'm going to take this and just expand it so I can use the arrow tool without interfering with it. Alright, so this is a 144 tick chart, and I want to show you some of these moves. This is T1. So this T1 is very sensitive, and it's also a 144 tick chart. So you're getting almost every move, if you're paying attention, goes above zero right here, and even though the 55 period moving average has gone below the major and the minor, since T5 is below zero, you don't really want to touch this, but it's still playable. It's like 1200 up to about up to 1205. Small move, but what you're really looking for is the downward moves, because we already noticed on the bigger time frame charts that they were below zero. So you don't want to buck the trend too often because you might have your head handed to you. But this one moved nicely. This is about of 1205 down to 1195. Nice move. And then as soon as this shows any indication of going above zero, you're out. So you have to have a trailing. Once it starts curving around here, you put in a trailing stop, and you would have probably gotten out right around here. Okay. Next, so you let this come back, since this is above zero, you let this come back up to the minor or the major because they're so close together there. And you can take this one. And this one went from a 1200 down to about 1185. When this when the bottom starts rounding off, you start trailing your stop. You definitely want to get out when it hits this. And you're about 1187 here. And you can ride Since these are starting to round off on the T1 through T2 through T5, and it's a deeper move away from the major and the minor, then these were playable back up to either this line right here at 1195, or if you wanted to lighten some up and then let the rest ride, move your stop to break even, and then you can get out here. But you're taking a chance you're actually taking more of a risk to get up here. Because if you took the risk to ride it high, you'd get out at about the same spot that you would have here. Maybe a little bit more. Okay, so this is coming down now from 1210 down, and you only want it down to the major, and where the major and the minor intersect right here, which is just 5 points, but that's all right. And now, basically right after the market opened for trade on New Year's Day, like at 5 o'clock, this breached on the upside the major and the minor, which had come together, and we got this 20-point pop, boom, just like that in a very short period of time. Now this is showing weakness right in here. So you'd want to get out here. Now you want to either wait for this to come down to below zero and this to come down below zero. And this is when I make the calls to my clients you're on the sidelines, you're waiting, you've got your profit, and let's just see what happens here. So I'll know when if and when this breaks down, if the T1 breaks down, then I have to look and see what T2 is doing, T3, T4, and T5. And then again, I'm going to also look at the 987 as an anchor to see where that is. Right now, the major, let me see, the minor, this is the major wave right here. It's butting up right against that. And if I open this up some more, then you can see it's right at it. So this may actually have a little bit more room on the upside. Again, tax loss selling, kind of panic selling at the end of the year, and now they want to take another position. But the daily and the weekly still look down, but it may not just be the time enough to get in right now, especially if you're a trader. Before I leave you tonight, I put up this explanation of gold and the offer I am making to new clients. The Triton waves are a premium trading algorithm that can be applied to all stocks or commodities in all time frames. The Triton Wave Consulting, which owns the Triton Waves, is making an offer to experienced traders to participate in gold trading. There is an opportunity here using the Triton Waves for entry points to cash in on small as well as large moves in gold. When the signal presents itself, you will get a text or email with a recommendation to go long or short. You, as an experienced trader, will set your own parameters for profits, stop losses, and trailing stops. When the trade changes course, you will also be notified to cover the positions. The gold market can be extremely volatile, but to a seasoned trader, using the Triton waves as a guide, that volatility can translate into big profits. During 2013, the Triton waves caught most of the major waves in gold. The fee for trading that I've established for Triton Wave Consulting, and this is just trading gold exclusively with my company, Triton Wave Consulting, is a fixed monthly fee of $3,500 in US dollars. It is not refundable and must be paid in advance. Also, you will be sent an invoice every month. In other words, it's not an automatically recurring monthly fee. I send an invoice, and you either respond or don't respond. You may stop at any time. The fee, as of January 7th, 2014, is going up to $5,500. If you sign up by January 7th, the old fee of $3,500 will apply as long as you remain a client. This offer is exclusively for gold traders with experience, seasoned traders, professional, what have you, but this is absolutely not for beginners. So if you're interested, you can shoot me an email, and I'll tell you how to set it up. This is Triton Wave Consulting. You can email me at, my name is Rodney Julian. You can email me at tritonwaveguy@gmail.com. Also, just to let you know, Brian McGowan, who is the director of the National Association of Day Traders, has been looking at my waves for over a year and a half, and he called the Triton waves a major new trading tool. Well, I hope to see you and consult with you. Have a great New Year's. I hope this year is very profitable for you, and good luck trading, and I'll see you at the next update.